The Newsday continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. The Bangko Sentral delivers an off-cycle 25 basis point rate hike as it warned that inflation will remain above the 2 to 4% target range. The Monetary Board met today and decided to raise the key rate by 25 bips to a new 16-year high of 6.5% in an effort to combat rising inflation. Rates on the overnight deposit and lending facilities were also hiked by 25 basis points to 6% and 7% respectively. Last time the BSP implemented such an off-cycle rate hike was on July 14, 2022, when they were compelled to make a significant 75 basis point increase because the peso depreciated to record low levels. Recall that inflation jumped 6.1% in September as food and transport costs rose much faster than expected. Despite fears of a higher than expected inflation, First Metro Investment Corporation and University of Asia and the Pacific expected the Philippine economy to post a 5.8% growth this year. That's faster than the 5.5% GDP expansion in 2022, but still below the government's 6 to 7% growth target. FMIC and UANP also expects third quarter GDP growth to average at 5%. The two institutions expect expansion to be driven by government spending. They say this should remain at a high trajectory and provide the main booster as consumers worry about inflation. Speaking to One News yesterday, Ronilo Balbiran of the UANP said rate hikes are not necessary to temper inflation. Balbiran explains that there is no need to temper demand as price pressures stem from supply-side issues. He also says reaching the government's growth target is still possible, barring supply shocks.
An additional cycle of rate hikes will have impact on our projections of our inflation and GDP growth by next year. But 6% for this year still possible if we see that the third quarter GDP has significant increase in government spending and government infrastructure spending. Otherwise, we can only expect less than 5% within the year, and perhaps
Now let's get more insights on the BSP's latest off-cycle rate hike. We have with us on the show Dan Roces, AVP and Chief Economist at Security Bank. Good morning, Dan. Thank you very much for joining us.
Good morning.
Okay, let's get right to it. What is your reaction to this off-cycle rate hike, and do you think this was really necessary?
Well, what we're seeing is the central bank's decision to raise the policy rate. That was driven by mounting local inflation risks. That's attributed to supply chain disruptions and increasing global commodity prices. That actually includes the threat of crude price spikes brought about by tensions in the Middle East. So, it has always been our view that they should have done that rate hike probably back in August or September. But circumstances, notably the second quarter GDP, actually prevented that. So, it was the BSP themselves who said that they're trying to, catch up with where the policy rate should be.
Okay, and last time you were here, you said the conflict in Israel poses some upside risk to fuel prices. Now, do we have a clearer picture right now on how big the impact will be on inflation, assuming that Iran is still at a distance?
Well, right now it's going to be volatile. So what that means is there's that threat that prices could probably spike if there's probably some buildup of tensions in the view that it's going to spill over beyond Israel. So there's always that threat. I mean, Israel's very close to those oil-producing nations. And, the real threat actually is if it does spill over, we could probably see 100% price spikes at the offset as a knee-jerk reaction to that. So that's a very big threat that the world actually is trying to grapple with at the moment.
Okay, you also said inflation target is unlikely to be met this year. Any changes to that projection?
Well, the map is showing, no, that yeah, you're correct. No, we might not be able to hit it. At least there's a very drastic drop in food
Uh-huh.
prices, which we aren't really anticipating at the moment, given that it's the fourth quarter. It's the holiday season. Traditionally, food prices remain at higher levels compared to the rest of the year. No? So with that, no, we think food prices will still be one of the biggest factors that will be driving inflation,
Mhm.
or even if we see month on month the prices aren't actually rising. No? So that big spike that we saw in September, no, that was a game changer. So
Yeah.
it's really, it pulled the trend down. The trend is still going down, but we anticipate probably the target will be met by around January, February only next year. And then, of course,
Okay.
there's that threat that it could reach the upper bound of the target once again around March to July. Our projections are showing that. That's also because of negative base effect as well.
So I don't know if you saw the last video we have with Professor Balbiran, but do you agree with him that it could further pull down growth? And do you also agree that the 6% target is still achievable, or will we really miss this target?
Well, our projections show that we might be missing it. Now we're looking at 5.6% growth full
Okay.
year.
Mhm.
No, it's not necessarily bad. No, at least the economy is still on a positive trajectory. No, but we might be missing the potential growth. Um, uh, as to the question as to whether that will slow growth, no, I
Mhm.
mean, policy rate hikes are designed for that. No, so we have to anticipate that growth will probably be slowing, especially um, as it operates with the lag. We might be feeling the full effects sometime first half of next year. So yeah, it should slow growth down. That should pull down inflation, and
Mhm.
eventually that could compel the BSP to finally start cutting rates, probably the second half of next year.
And of course, we're already in the Burr months and leading up to Christmas and the holiday season. And of course, on Monday, we have the BSKE, Barangay Sangguniang Kabataan elections. Now, how much do you think of a boost these two events will have in our growth that we are expecting by the year end?
Or there could be some add-on effects towards private consumption. No, well, government consumption uh, doesn't necessarily equate to the barangay elections. So it's more of the midterm and national elections. But we could see some potential boost, especially with private consumption, given that it's a holiday as well, and there's going to be one holiday after another
Mhm.
that could potentially boost income from tourism as well, or local tourism. So it's not necessarily because of the election per se, no. But we do uh, see that the overall impact towards infrastructure, the bigger ones, like infrastructure, government spending, private consumption, that tends to take place normally when there's
Mhm.
a national election uh, taking place. No? So this one, probably some boost, but not that big of a boost compared with national exercises.
Yes. And aside from all that we've been talking about and you've mentioned, is there anything else that the government can do at this point to boost growth?
Well, at this point, uh, I think it should be more, more longer term looking.
Mhm.
We see that our problems stem from, importing food, which we could actually produce as well. No? So I guess there are already initiatives in place. No? But having said that, no, I think the surefire way for inflation to remain controlled is that if we have a very comprehensive, continuous and sustained food policy program, or food production program that should help pull prices down, especially with the volatile component and with the
Mhm.
food CPI. So, we don't have oil natural resources, so we're compelled to import those. We can't do anything about it if prices globally go up. So, I guess one variable in our control is actually food production.
Okay. Well, finally, sir, I would like to ask you, do you see the BSP bringing down rates by next year?
We do expect them probably, our view is for a higher for longer policy stance. So that means we could be at elevated levels up until probably the third quarter of next year. Once we see that slowdown, and once we won't go first, or we won't go ahead of the Fed. No? So we have to see if the Fed does policy rate cuts as well. No? So once they do, that will be a signal to us for us to expect that the BSP might likely follow with their own rate cuts.
Okay. Once again, very interesting insights, and thank you for joining us. Dan Roces, AVP and Chief Economist at Security Bank. Good morning.
Thank you.
We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. The Transportation Department says there are no China-funded infrastructure projects in the pipeline as of now. DOTr Assistant Secretary for Railways Georgette Aquino confirmed this on The Big Story after the Philippine government dropped its request for loans from China for the funding of 3 railway projects. These are the South Long Haul, Subic-Clark, and the Mindanao Railway projects. Aquino added that there has been no response at all from Chinese government on loans for the railway projects. Nonetheless, she stated that the Mindanao Railway is still under the Marcos flagship infra projects.
Well, we cannot just assume, right, as to the reason behind the response from the Chinese government. But this project, the Mindanao Railway project, has been approved by NEDA. This has been studied. In fact, it has been in the plan of the previous administration, and it is still in this administration's plan.
Residential property prices in the second quarter rose at the fastest pace in 3 years amid high interest rates and rising inflation. Data released by the Bangko Sentral ng Pilipinas showed the residential real estate price index increased by an annual 14.1% in the April to June period. Nationwide, the prices of duplex housing units rose by 24.6% year-on-year in the second quarter, faster than the 11.3% in the same period last year. Prices of townhouses and condominium units, meanwhile, rose by 14.7% and 5% year-on-year respectively. Due to higher interest rates, the BSP reported a 1% decline in the number of residential real estate loans granted for all types of new housing units in the second quarter. ING Bank senior economist Nicolas Mapa said the drop in housing loans showed that would-be buyers are unable to afford new housing, which would explain as well the drop in private construction activity in the second quarter. Operators of the North and South Luzon expressways are gearing up for heavier traffic expected for the long weekend. NLEX Corporation says it is implementing additional traffic measures as it expects a traffic volume increase of 10%. This includes deploying over 1,500 personnel for increased patrol visibility and toll plaza assistance. The operator also reminds motorists that all toll plazas in NLEX and SC Tex are included in the dry run for cashless toll transactions. San Miguel Corporation likewise advises motorists to anticipate heavier traffic volumes across its tollways. The SMC says all roadworks and related activities that could affect traffic will be suspended starting noon today and resumes at 10 p.m. on November 5. The company will also mobilize additional personnel at exits and toll plazas where traffic is expected to be heavy. And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News, all sides, all the time.